Hi, I'm Austin Gehring with Ag360 Grain Marketing. A reminder to check the timestamps in the description below if you want to skip through this video. In this week's podcast, we look at the bottom line, what is likely with these grain prices. Today is the afternoon of Thursday, July 31, 2025. Here's today's Market IQ report. First off, we'll take a quick look at the recent price ranges. For December corn, we seem to be at lows on the close that we've seen over the last 3 months. Looking at November soybeans, same story. We kind of made new lows today here in the last 3 months for November beans. And finally, looking at old crop Kansas City wheat, we're kind of more in the middle of the range for the last 2 weeks and 1 month. But over the last 3 months, we have seen we are on the lower half of those prices, though that does include the July contract that is now off the board. Looking at September. Here we have Kansas crop insurance prices for corn, soybeans, and wheat. The corn projected price is at $4.70. Bean projected price is at $10.54, both well above the current prices. We saw the finish of the wheat insurance prices projected was at $5.90. Harvest was at $5.37 on the July contract, and the 2026 projected price will be discovered here in September. Let's look at the corn market and see how the market is comparing today versus similar past situations. The corn technical indicators, short and long term, are near lows, saying that we are an oversold market. Could provide some sort of rebound. Hard to come by these days. Looking at the fundamentals for corn, the U.S. carryout and world carryout use ratios are showing that most prices have been higher in past years with a similar fundamental situation for those. Dollar index and inflation or financial pressure were near 50% on that gauge, so not as much pressure just coming from that. But the summer gauge here at 0%. It does try to put all this info together into one gauge, trying to compare to past situations where all of these were true. Most of it's limited to find those situations, but they have been slightly higher, more in the middle of the $4 price range. So let's look at market alerts. This market alerts are the first of 2 Market IQ tools that can be used to create a marketing plan around. As a reminder, these are sent whether or not the current price is above or below the crop insurance price and try to alert you when there's a pricing opportunity. Old crop alerts are for remaining total production after harvest. New crop alerts are for your target pre-harvest sales. So far, corn has sent out 7 of 20 for the 2025 crop. Here's a look at the recent market alerts so far this year. It's been downhill slide continually over the last few months. Corn market alerts are turning from prices to take advantage of that are likely better at harvest with all of your pre-harvest target sales to marketing the bushels that need to be moved at harvest when the market shows any life. We'll talk more about this in the corn market outlook section. Now we'll talk about price targets, the second Market IQ tool that a marketing plan could be created around. Price targets are not predictions, just an action plan if reached. As we mentioned, the crop insurance price established at $4.70. Targets are higher than the insurance price. That's just how it works. You can use this as a marketing plan if you'd like to only improve on the projected insurance price with your insured bushels. At this point, if you don't want to risk getting less than your insurance guarantee, you may have to hold until you know your bushels at harvest. That's not a recommendation, just saying that there's risk in selling here, not producing, and having the insurance price end up higher at harvest. Just a reminder that past performance is not indicative of future results when looking at this chart. This is today's price versus relatable report day prices. The yellow dots and lines are relatable report day prices over the last 10 years. The red, yellow, and blue coloring in the black background tell you how many times we saw prices at that price range. Red is often, yellow is somewhat frequent, blue is less frequent. The U.S. carryout to use ratio is roughly in the middle of what we've seen in the last 10 years. World carryout to use appears to be the lowest in over 10 years. Just briefly glancing at this chart, the most common range has been $4.25 to $5. Though occurrences are limited, and take this one with a grain of salt. We are sinking to the lower end of that price range. and that is unless the USDA starts reporting a bigger yield picture. So we'll see what comes at the August 12 USDA report. Here's where we're at for the corn market outlook. We have sent out 7 of 20 market alerts and not hit any of our price targets yet. Where would we like to be? We wish we've taken complete advantage of prices early in the year. No price target hit yet, as we haven't traded above the insurance price. That's working exactly as it should. Based on what we discussed and what our marketing bias is, what do we see coming up? It's likely, though not certain, that prices will stay steady to lower through harvest. Bushels that need to be sold at harvest, like cash flow, no storage, etc., could be looked at price or forward contracting anytime we see a small increase in price. Bushels that can be held onto for a few months after harvest can potentially find better prices during the South American growing season around January. No guarantees there either. The confidence gauges below hadn't seemed to be as helpful this year. While they're still giving true values compared to past history, the market this year seems to be solely focused on a large yield and no other fundamentals in the U.S. and world. Moving on to soybeans. Technical indicators are a bit higher, but still in the red, showing that we are still somewhat oversold in the bean market as well. Fundamentally, U.S. carryout to use ratio says most prices have been higher with a similar U.S. picture in the past. World carryout is a little bit heavier, showing that 65% of prices have been lower with a similar world situation. Dollar index and inflation showing that beans could be pressured by the dollar index in financials with that gauge at 70%. Overall, the summary gauge trying to find situations in the past where all of those were true, so that only 28% of the time the prices were lower. But I give a note to that it's a common world carryout to use price, but the U.S. carryout to use is a lot less common and only seen during the height of the Russia-Ukraine war prices and a few other times. So with that uncommon ratio, it might be quite hard to get that summary gauge in the green because that just wasn't super common in the past. Looking at market alerts, soybeans have sent out 14 of 20 so far this year, a lot more than corn. Here's a look at the recent soybean market alerts so far this year. As with corn, soybean market alerts are turning from prices taken advantage of that are likely better at harvest to marketing the bushels that need to be moved at harvest when the market shows any life. The soybeans may have a month of August before the crop still needs good weather, so there's maybe opportunities there to see, and we'll talk about this more in the soybeans market outlook section. Price targets for soybeans, crop insurance price is at $10.54. Targets, again, are higher than the insurance price. You can use this as a marketing plan if you like to only improve on the projected insurance price with your insured bushels. As with corn, you may want to just hold on to your bushels for harvest because there is some risk. It's not a recommendation, just saying that there's risk selling here, not producing, and having the insurance price end up higher at harvest. So something to think about. Moving on to historical soybean fundamentals and where prices have been, we have a lot more occurrences. Soybeans often trade anywhere between $8.50 and $10.75. We're in the upper half of that, but we're dipping below $10 to more in the middle of that big price range. A lot of the higher prices on this graph are during the Russia-Ukraine conflict, where we had a similar U.S. ratio. World carryout to use is comparable to the last years, where we see the lower prices. We probably still have more downside than upside even at these recent lows, but weather can still be a main driver in August. A lot of the prices were in the $9 to $10 range in the past, so something to keep an eye on for sure. So here's where we're at for soybeans. We've sent out 14 of 20 market alerts, and we haven't hit any price targets, so we were real close. Where would we like to be? I'm glad we're at 14 of 20. We probably want more sold than that, as I don't feel like we'll reach the year highs again, but we'll have to see. Nothing's impossible. We are approaching the same situation as corn, but historically soybeans have the month of August where the crop still needs good weather. So a weather rally could be a little bit more possible at this point than corn. Still, prices are low and bushels that need to be sold at harvest for cash flow no storage, etc. reasons. Should be looked at to price or forward contract anytime we see a small increase in price. Bushels that can be held onto a few months after harvest can potentially find better prices during the South American growing season around January. No guarantees there either. Confidence gauges for soybeans, on the other hand, have been quite helpful this year as the 2025 high prices have coincided with green readings on the summary gauge. Reaching those prices again will likely show a strong reading in the summary gauge, but I fear those prices will be tough to come by, 70 cents above today's price. We may have to lower expectations. Moving on to Kansas City wheat, the confidence gauges. The technical gauges are at 30% and 15%, leaning toward a oversold market. Could see some bounce back from here or some support. The U.S. carryout to use ratio has the gauge at 58%, saying that more than half of prices were lower than higher with a similar fundamental picture in the past. As far as the world goes, world fundamentals said only 31% of prices have been lower, so maybe there's some slight support from the world situation. And the dollar index inflation have mellowed out with these prices, saying that half the time prices have been lower, half the time prices have been higher with a similar financial situation. Putting all that together, compared to years past with all of those being similar, 66% of the time prices were lower, so that still gives a little bit of pressure on the market, but we're not quite in the green as far as we were in years past, so we might be kept range bound, continuing to try to test those higher prices, but maybe not super upside. Kansas City wheat had 20 of 20 market alerts sent out for pre-harvest. We're now looking at post-harvest sales, currently 1 of 10. For market alerts, we're now trying to pick spots to sell bushels after harvest. Every farm operation is different. Market IQ tries to find quick market alerts at short-term highs to give those a chance to stop storage that hold it at the local elevator. If you have on-farm storage and can hold onto it longer, you may pick and choose what market alerts you want to listen to in the near term. Price targets for 2025 wheat are done with. We'll move on to 2026. But we'll wait till September to start building those around insurance. Finally, we look at historical wheat fundamentals and where prices have been. Wheat often trades between $4.50 and $5.75, according to this graph. So we're kind of more in the middle of that. We're hoping $5 can hold. We will see how that goes on the September contract. The U.S. carryout to use ratio is on the higher end of what we've seen in the last 10 years. World carryout to use is pretty average. Here's where we're at looking at the Kansas City wheat market outlook. We've sent out 1 of 10 market alerts so far, and we're not doing price targets at this time of year. As we mentioned, where would we like to be? Well, we want to be 100% sold with some prices seen before harvest. Hopefully we get some short-term opportunities that might help ease some cash flow. Based on what we discussed in our current marketing bias, what do you see coming up? Upside looks limited in the near term. The summary gauge indicates a combination of current fundamentals, technicals, and financials have been steady to lower prices in similar situations in the past with the 68% reading. Make sales as needed for your operation. Hopefully we'll see some small bounces to make those happen. Historically, November to February have had slightly better price outlooks when global competition eases. We can hope, but not rely on supply issues or positive trade deals before then. Consider a call spread, buying a call, selling a higher call, to target a small increase in price at a cheaper cost than just buying a call. Moving on, here's a quick look at livestock, looking at the indicators. Currently, we've got 2 of 3 indicators triggering for live cattle and feeders, and that's because today we took a huge dip, $5, $6 lower on both live and feeders. We'll see if they bounce right back up. These are prices we saw on Tuesday, so we could totally bounce right back up. Every bull market needs to take some steps back as they continue higher. Some people have mentioned that maybe the cattle markets are running out of gas, but nobody really probably really knows. Tough to read on, but that's what it's showing today. Looking at the hog market, we're not quite triggering 3 of 3 market alerts as it's backed off slightly. And then looking at the U.S. diesel, we're trading more in the middle of the range we've seen the last few months, and 0.3 are triggering. So maybe the buying opportunity was a little bit earlier if that relates to gas prices around here. A quick rundown of what prices we've traded for on farm merchandising. For September corn, we had a 3 under picked up your farm bid. For November soybeans, for beans in the bin currently, 47 over delivered Wichita. And then if you've got some wheat, the latest bid was 23 under the September wheat futures delivered McPherson. Call our office if we're looking to move some bushels, and prices vary by location and are subject to change. That's all we have for today. Thanks for listening. Be sure to find us on our website or on social media. We often have a daily grain market update video posted on our socials when there is exciting news in the market. It's been lax lately. Contact us for any questions about anything we mentioned today, or if you're interested in any of our services. We'll see you next week.